Oh, hello everybody. Yeah, quickly today I want to talk about Brexit, the crash, why the stock market is not doing so well. I mean, they are anxieties, of course there are problems, and it's not easy, but over the long run the stock market will do fine. The trick is just that you have to save long term. Anything that guarantees you a return, there are products out, it's not good. So you need the risk to make a decent return with your money. So that's the stock market. And with the stock market comes volatility, and it comes with the possibility of a crash and problems and so on. So, but when you're smart, you can live with it. I mean, if you steadily save every month into an ETF product or an index fund, you will do so fine after decades. But sometimes the stock market will crash down 30%. Can be upset. But I mean, people that understand it and that it's part of it, they just hold on to their investments, hold on to their stocks, and keep on moving on. They don't get nervous. It's all psychology. It's like strength and having a goal. Saving for retirement is a marathon. It's not a short distance race. It's better don't trade and jump in and out. It doesn't pan out. It doesn't pay off, because one problem is the best days on the stock market. You don't know. There's nobody who tells you that in a week will be the best day in a year. And those you need, those best days, those best weeks. And when you jump in and out, you don't get them usually, or you miss those important days. And then there are studies, they show if you miss those days, your return will not be that great as being a buy and hold investor. Buy and hold means really you make a decent return, and the crowd will always jump. The people will get always nervous, and they give up a lot on the activity. So Brexit, that Great Britain leaves, is probably, of course it's bad, there's an impact. And if the British people leave the European Union, there will be a setback for Europe, and there will be a setback, a huge one for England, because if you isolate a country, if you isolate an economy, you will not do that well as if you leave it together, strong together in a kind of community, in a union. And but the British people decided, so the politicians have to figure out what they do. The stock market is just reacting to uncertainty, and it's a bit, of course, it's a little nervous what's going on. Financial stocks went down a lot, especially in Europe. The British pound is on a 31 year low. 30 years, can you imagine? 30 years low. And it's terrible. And maybe real estate prices will drop in London and in England, and Great Britain may not do well over the next couple of years, but I don't know. Anyway, the markets show you there's something going on. But I'm a long-term investor. I don't touch my stocks. I keep them. I hold on to them. I even will add more. I automated my dividends, that they will be reinvested automatically. It's called a DRIP plan, dividends reinvestment plan. You can set it up, and it costs, with most discount brokers, it costs you nothing. Every dividend that goes onto my account will be reinvested automatically within the same day or next day. And that's a great way to keep the snowball moving. And that's what I do. I don't get nervous. I mean, it's maybe a little bit upsetting, but Brexit, that Great Britain decision that the people voted to leave the European Union, can upset people. But I personally, I really don't get nervous, and I keep doing what I do. Investing is a marathon, what I said before, and it's not a race. Okay, take it easy. When you want to have a great return, you should have also deal with uncertainty in between, with volatility, with the setbacks. That's part of it. That's part of the game. Okay, bye.